Business is basically 4 phases: set up, run, grow, sell. I love failure. Like my mantra that I teach my kids is do, fail, learn, and pivot until you hit your goals. The amount of money you put into it and how often you buy into it and what you buy should be proportional to the amount of knowledge you have in it.
Hi, everyone, and welcome to this episode of the podcast. Now, today's guest, he was an ex-RAF pilot that left to become a full-time trader for the last 17 years. He's completely self-taught, impatient. He quickly lost quite a lot of money along the way. Eventually, though, learning from his mistakes, trading became quite profitable for him. In his mid-20s, he began to excel at trading and investing. He was able to earn 7 figures from trading, not selling courses or any of that kind of stuff. He made £426,000 in a few hours on Black Monday in 2018 and generates over 10,000% ROI on his crypto portfolio. So he knows a thing or two about investing. He's one of the world's leading authorities on how to safely invest in cryptocurrencies. He runs The Realistic Trader, home to the world's best crypto investing course for beginners, with a community of followers around the globe. He's an awesome speaker, and I guarantee you, if you listen and pay really close attention to what he says today in our interview, you will take a lot from it. So let's cue the music for Siam Kidd. Megaverse, the digital frontier of tomorrow. Megaverse stands at the cutting-edge intersection of technology and imagination. It's a virtual realm where the limitless expanse of the digital universe unfolds, offering users unparalleled experiences and interactions. With its advanced metaverse platform, users can craft unique avatars, forge connections, and even establish their own digital estates. It's more than just virtual reality. Megaverse is an expansive digital civilization teeming with opportunities for both individuals and brands. From immersive concerts to revolutionary retail experiences, Megaverse is redefining the way we engage with the digital world. As we stand on the brink of a new era where the lines between our physical reality and the digital realm blur, Megaverse is poised to lead the charge in this brave new world. Dive in and discover a universe without bounds. This really is the future. And lastly, thank you to Najahi Events, who have been sponsoring us now on the podcast for over a year. Najahi bring motivational speakers to the region to help inspire, educate, and motivate you to achieve better success and live a better life. Right, Siam, thank you so much for coming to join us on the show today.
Thanks for having me. Stoked.
You drove 3.5 hours to be here.
Yeah, it takes forever to drive anywhere from Norwich. There's speed cameras along the whole way now, so...
So just to give everyone context, Norwich is in...
arse end of nowhere.
Kind of like, yeah, it's one of those places in the middle of nowhere. It's like it's not attached to anything. So coming all the way down, I really appreciate you taking the time to do it. Good. Okay, this audience in the Middle East that listen to this content on a regular basis won't know who you are. So what I'd like them first of all to do, okay, is for them to be going, who the F is that?
Yeah.
And you said, let me tell you who I am. So please introduce yourself. Tell us about yourself.
Well, as I said earlier, I personally believe I'm a nobody from Norwich. I'm literally just a bloke. I used to be an Air Force pilot, not for long, about 8 years or so. And then I've been trading since I was 18. So I've been trading for about 19 years now. And the first 6 years of my trading, I was probably the worst trader on the planet. I had no money management. I was basically, my Air Force income was like £2,200 take home a month. I'd blow 200 quid in the bar every month. And, you know, a pint of beer back then was like 50p in the officer's mess.
How old are you?
I'm 37.
You look like you're 22.
No, I got my grey hairs. Yeah, and then I used to blow £2,000 a month, every month on the markets. Sometimes that £2,000 would last a day, and then as I got better, it would last a week, and then a month, and yeah. So basically, for 4 to 6 years, I was just a degenerate gambler, basically. But I saw other people doing it and being cocky, you know, and arrogant, and thought, I could fly a military aircraft. Everything in life is going to be easy. God, no. Mother market will humble anyone that disrespects it, or underestimates it. And
what were you trading?
Currencies, so FX. Yeah.
Okay.
And yeah, after about year 6, I started actually making money, and then I was like, shit, I need to leave the Air Force. There's one pivotal year I remember where read Rich Dad Poor Dad for the first time, and there was this station commander pep talks every year. The station commander would get all the junior pilots in and go, if you do well, one day you'll be in my boots, etc. And I was like, what's the station on? And we asked. I was in the back row. And we asked all our friends, and turns out apparently back then, probably changed now, that person earned about 80 grand a year. And I was like, oh my God, I have to work another 30 odd years to maybe become a station commander. And my training was doing better at that point. And I thought, I want 80 grand a month, not a year. And I want it, within a relatively short time frame. So I then realized that two big face slaps. One, I was a good trader back at that point, pretty much. And I could consistently grow an account by 10 to 20% per year, which is not bad. But the problem I had is I had very low capital. I had probably 50 grand to my name at that point. And 10 to 20 grand percent per year on a 50K account is going to take a long time to hit the monetary targets I had in my head. And so I'm a big fan of first principle thinking. And thankfully, Elon Musk has now sort of made that much more aware. But and I was thinking, right, what is the most logically efficient way to get to my monetary targets? And I realized I had the skill, I just didn't have the capital. So then I was like scouring the globe for every asset class there was, and I was thinking, how can I get there? And there's two things. One thing I learned very early on is that the real inflation figure is actually the US M2 currency supply. So currency expansion, whatever the rate that was basically real inflation, and we can go on to that in a bit. And I realized that the global monetary hurdle is 15%. And if you're not making 15% per year, you're losing money. And I was like, geez, okay, so what on the planet makes 15% or more? And the CAGR targets I had in my head, I actually needed to hit 50%. And the only thing I found was business. Business was literally the only thing that, if you got the hang of it, would do more than 50% per year. So I was like, okay, I need to get into business, try and do the business cycle. And again, I approached business in what I thought was a logical way. I was like, if I was an alien visiting Earth, how would I set up a business? Ignore all the societal norms and biases. And I realized business is basically 4 phases: set up, run, grow, sell. And then when you analyze the world of business over thousands of years, everything has a standard distribution. And most businesses don't do that. They set up, run forever, and then maybe die with a silent whimper. And so I was like, okay, I need to master the set up, run, grow, sell thing. And so the first, 2 or 3 businesses I set up literally did nothing because I was an idiot. I didn't know anything. And one of my, I found a mentor back in the day, a guy called John Davey. He's a guy that you should definitely have on here. He created Jongleurs Comedy Club.
John Davey?
Yeah. So
John's one of my friends.
John Davey, yeah.
Marissa's husband.
Yes, Marissa. Yeah. I love John.
So Marissa Peer's husband is John Davey.
Yes, exactly.
John's one of my friends.
Yeah, and he's helped Marissa Peer boom with RTT. So I love John and Marissa. And one thing he said to me probably a decade ago, he was like, just do the 5 to 9 game. And I was like, what's that? Thinking it was about a job or whatever. He was like, no, set up, run, grow, sell a business for 5 figures. Then do it again, sell it for 6 figures. Then do another one, sell it for 7, 8, 9. And I was like, wow, you need a lot more skills if you're then going to sell a business for 7 or 8 figures.
Yeah.
And I think the key thing is to not become emotionally connected to your precious baby business, or like everyone is. You have to treat it like, okay, your business is the product, and you have one customer, which is the person or entity that buys your business. I just got into business with the sole goal.
Because a lot of people would be interested in this.
Okay.
Because you're right. Everybody anybody that does start a business invariably gets the first one wrong. But when they go again, it becomes literally a way of life. It becomes they eat, sleep, and breathe. It becomes something they care about greatly, but they don't think about the exit.
They choke their business with love. That's what always happens.
They choke their business with love. What a great statement.
Yeah, they mollycoddle it to death, basically, and they'll never sell it, and the whole business will be them-centric. which then in turn makes their business completely unsellable. Most of the time it's unautomated. They won't have standard operating procedures. They won't trust anyone with anything because no one will do it as good as I can.
Is that the one-man band, or is that the 10 employees as well? That's that stage, or the couple of million turnover companies too?
No, I think you sort of exit that sort of mollycoddling phase when you have about 6 staff plus, because by then you if you've got a business that can maintain 6 staff, you're going to be doing 6-figure revenue at least, and therefore you would have matured as a business owner at that point, and you will be forced to hand over stuff. You'll need head of product or head of sales or marketing or whatever. You can't do everything yourself.
Organizational chart.
Yeah, exactly. I prefer accountability spheres. But it's sort of inverted. You, like, as the director or CEO, you are the bottom of that shit filter. So businesses are basically massive funnels for shit, and they attract just shit, obviously. And it will go through several layers. So, the first gatekeepers like receptionist or, whatever. And if there's crap coming in that they can't solve, it goes to their line manager, etc., to the point where no one in your organization can deal with the crap that's just landed on the desk, and only you can deal with it. So really, you are, as a director, you are chief shit dealer, and also you should only be doing things that a director should do, which is JVs, new products, new markets to go into, and exiting or money raising and exiting.
But let's talk about that for a second, because a lot of people in business think about selling, but then lots don't think about selling. There might be I don't know who would ever buy this, I wouldn't know what to do with it. And then there's the people who think about selling but don't know what the process is. Now, so John Duffield, who used to asset management and was Jupiter before, I had dinner with him one night many years ago, maybe 15 years ago, and he sat down, he said, you've got 2 choices. He said, you take the money off the table every year, or you build it to exit. They're your 2 choices. Simple as that. He says, if you want to take the money off the table every year, that's absolutely fine. Yep. He said, take it off, keep that business running. He said, but if you want to exit, it goes, you have to start off thinking, who's going to buy this? And how am I then going to make all of my effort to get to know all of those potential buyers way in advance of me selling it? So I can build relationships with those people so that when that time does come, we're aligned.
Exactly.
Make sense?
Yeah.
And so that was really great advice that he gave me all those years ago, because I sat there. And so then I went through a stage of going, I don't want to exit. And I just took money off the table every year. So I went to this program, and then I used that money to do other things with, other businesses, investments, etc. But now I'm in a situation where I've got a group of companies. Yeah. And it's just like, right, we're going to exit. Who's going to buy our company? Yeah. And so we're now looking, and it's banks or insurance companies in my space. Yeah. So who do we need to know? Who do we need to know? Who do we need to build a relationship with? So
the podcast is an amazing vehicle to get your network,
this
network out there.
This is so funny, I was talking this is what I preach, okay? So lots of people want a podcast, okay? Less start a podcast, okay? And most don't keep it going.
Yeah, that's the hard bit.
Now, I'm 260 odd episodes in, so I think I've passed that thing. Most people don't get past 20 episodes. Yeah. Okay, I think 12 is the average. It's too much time, too much effort, too much hard work. But let's say, okay, I wanted to sell my company. I would interview on my podcast every single week, every CEO of every company that I thought might be interested or could be interested or might be a partner for my business.
Exactly.
I then have an hour and a half of building that relationship with them, getting to know them, okay, building some rapport. Yep. And then I can then at any time in the future, so let's say 3 weeks down the road, I can pick the phone up, call them and say, just want you to know, everyone loves the episode. They really enjoyed it. I've got a couple of questions. Can I buy a coffee? Yeah. And they will always say, yes. Yeah. Definitely. And so what a great way of prospecting to find, because when you start off on the journey of trying to sell a business, what do? Oh, hold on a minute. There's people called VCs, there's private equity, there's angel investors. Where do I find these people? It's hard. And it is hard because people don't know where to start. Yeah. The people that live in that world, like everybody in their own world, are like, cool, it's easy. It's just, it's John here and Phil there. Talk to them, But when you're not in that world, just like you and I, I don't know, let's say we wanted to open an optometrist. And it's like, who makes glasses? What do we do? Can't even spell it. Exactly. Okay, sorry for interrupting.
No, it's good. It just reminded me of a sort of a different thing that I used to do to buy businesses. So one of my favorite methods when wanting to get into a new sector is I would I haven't done it in years, but I'd have these dinners. So, for example, I was looking at buying a marketing company about 4 or 5 years ago, and so back then I could go to Experian, buy a massive list of marketing companies within a certain niche and revenue and employees, etc. And I would buy like 3,000 contacts, and I would send a letter out to all 3,000 of them, and the letter would be something like, "Hey, my name is Siam. I've got a pot of money, and I'm looking to get into a recruitment marketing company within this niche. I only have the time and money capacity to buy one, maybe two, because I want to go, put a lot of effort into it. I found you I'd literally bought a list, and I'm sending this identical letter to 3,000 other people. And what I'd love to do is I've booked the penthouse suite at is it Hampshire Hotel overlooking Leicester Square. So I used to do it at the top floor there. And I've got this lovely 5-course dinner, and I'm open invite to anyone that wants to come, or one of this 3,000. But there's a 25 spot max capacity in that penthouse dinner room. So if you want to come, please just email my PA with all these details. Worst case scenario, you have a nice meal and you get to meet all of your competitors in person. Best case scenario, we can maybe see if there's a win-win. And also, please pop in your last year accounts with my PA just to get rid of tire kickers. And then normally we get 30 people say, yeah, I'm up for it. 10 companies won't do that first filter and sending their last year's accounts, whatever. And so you'd get, probably 20 say, yeah, I'm coming. And then always last minute, probably 50% no-show rate.
Really?
Yeah. So you always end up with 20 yays and then probably 8 to 10 actually turn up. And then I used to really just enjoy it, because during starters, we do intros. So I'd be like, right, 1 minute around the room, bit like old school BNI, like, who are you? What do you do? What do you do for fun? And a silly fact about yourself. And it was always like, hey, my name's John. I have this marketing company in this niche and we do blah and whatever fact. I was like, hey, my name's Dave. I have an identical business to that one. And around the whole room, like, same business. Yeah. So then, you do a presentation over main course to say, hey, this is me. I'm got nothing. Literally lift up your skirt, tell the truth, and then Q&A over dessert. And then next steps is if you're interested, let's have dinner with your significant advisors, which is normally wife, accountant, lawyer, whatever. And then, I found that it's really great. And byproduct, just like you're doing with these podcasts, is that you make friends, even if you don't do deals. So I've still got good mates in the whole marketing world. And so, and I guess you could probably reverse engineer that to do exits, maybe. I don't know. Hold investment dinners with
why not?
Whatever. Yeah.
Why not?
So,
Interesting you did that.
Yeah. Sorry, bit of a random tangent.
I don't think there is. I think that's actually really, again, who goes and does something like that? I don't know how many people will start a podcast on the back of this idea that I spoke about, or do those dinners.
Yeah,
There's only a small percentage that will take action.
Exactly.
So I'll look at the camera right now. Are you one of these people that's going to take action or not? Okay. I'm looking right at you, so you tell me. Okay. So you got yourself into this world of trying to understand more and more and more. Business was the area you were going to make the cash. You're like, okay, right, how do I build these businesses? And then you learn about how you build, you learn about how you exit by trial and error, which I like.
More error than anything.
Yeah.
Yeah.
Error and error. And that gave you, if you're intelligent enough, that gives you plenty of examples of don't put your hand on the stove.
Yeah, exactly.
Examples, yeah?
Yeah.
So what happened next?
Just error after error. Honestly, some people say I'm successful, but every time I look in the mirror, all I see is raging failure. But
Really?
Yeah. But the thing is,
that's interesting.
I think everyone mentally or internally has their own personal thermostat on every aspect of life. So, for example, I've got accustomed to a way of life, the way I live. And so let's say my monetary thermostat is here, right? So if I ever have bad times and all of a sudden I'm now rock poor or whatever, I wouldn't do anything but hustle and bustle, and I would work 18-hour days until I just got back to my base level. And then if you do well, you're doing better. You self-acclimatize to that new monetary level. And it's not just money, it could be fitness or whatever. Like, I'm happy being how I am. I have no need or desire to become fully jacked or, become a big bodybuilder. But it's because my physical thermostat is there. Everyone has all these thermostats. So for me, I love failure. Like, my mantra that I teach my kids is do fail, learn and pivot until you hit your goals. To the point that they just, every time they want to quit, they're like, what's our mantra? And they're like, do fail, learn, pivot. So yeah, I mean, and the thing with that 5 to 9 game, you go through so many errors. So if you fail, you've got to fail fast. Most people, one, they don't like failing, so they'll do everything possible. So they never put themselves in a position where they can fail. And those that do actually go out and do something, when they fail, they drag that failure out for as long as they can, which is bad. You learn nothing.
That's because a couple of issues. So an issue that you spoke about a minute ago with your thermostat, it's your standards.
Yeah,
okay.
Standards. Better word.
The failing is not the failing itself; it's the shame.
Yeah.
Okay. Because they worry about what other people think. Yeah. They worry about what their local community. That could be their direct family. That could be, their mates at the football club. He was driving around in the Aston Martin and now he's not. He's a failure. Okay. Yeah. And then it's the shame on that rather than he was, because they don't understand business.
Exactly.
That person's worried about what other people think. When you get to a place, my mum used to say to me when I was a kid, what you think about me is none of my business. Say it. And I'd like, what you think about me is none of my business. Okay, say it again. What you think about me is none of my business. Say it again. What you think about me. And so my mum made me say that over and over and over and over again till I got to the place where I don't care what you think about me. Now I have relative success. When I was younger, okay, there was an aspect of my ego that cared. Yeah. Okay. You're 30 what?
37,
so a bit younger than you. I had that. The age I'm at now, I really don't care. Yeah. And good examples of that are actual experiences in life. So your fancied Aston Martin that's parked outside, I've had all of those cars too. Change them every 6 months, lost a fortune every time we change them, blah, blah, blah. I have had a Range Rover for 10 years. Yeah. And my wife keeps saying, can you please go and get the new one? Yeah. Yeah. And I'm like, no.
I've got 2013 Sport as well.
Okay, so my Range Rover is 2013. Yeah, it's a Vogue, so it's the bigger one. Yeah. It's not quite, but it's nearly at 200,000 kilometers.
Amazing.
And I had one issue with the engine that was sorted out and fixed. It runs better now than it did before.
Just one issue.
and I kid you not. Okay, I'm willing that car to last another 200. Yeah. And it's almost like there's a defiance in me that says, no, that it's got a supercharged engine. It's quick. It's big. It's spacey. Petrol costs nothing in Dubai. The air conditioning, because this is the most important thing in Dubai, the air conditioning works really well. Okay. And I'm like, I will not get a new car. Now, all of the people that I know that are much younger than me, that are doing well for themselves in different ways, I see the Rolls Royces and I see the Ferraris, all that kind of stuff going on. And I laugh at them because I'm like, that would change. I hope anyway. Yeah. And it's like not caring what other people think, being in a position where if your business does well. So I started a sales training company. It's called Make It Happen. And I built an online course, 400 videos, A to Z of sales training, everything it needs to be. I launched it in 2016 or 17. And the first month, 960 people signed up.
Wow.
At £1,000 each.
Jesus.
I thought I was
God.
I thought I was Mr. Internet.
Billy Big Balls.
I was like, you know nothing. Come to me. Come talk to me and let me give you my wisdom about how you sell online courses. The second month, I think we sold 37. Yeah. So it fell off a cliff. Now, as time went by, okay, the money in that business is actually in corporate training. So you go into companies and you train the companies. Now, I'm a sales guy. Okay, when I'm training other people's staff, and their company's paying for it, they don't have to be engaged.
Sure.
They don't have to show up, and they don't have to do the homework and take the action. So I learned very quickly that because they're not my people, it got a little bit boring.
Interesting.
And so what could I do? I was social media had me as Mr. Make It Happen. Social media was
Yeah.
like, all my content was about sales. And I was just, as time was going on, I'm like, I don't like this. I don't enjoy it. I don't want to do it.
Yeah.
Now, what could I do? Could I have kept it going? Yeah. Could have kept it going and could have spent a day a week doing that kind of stuff. But I just got so fed up with it that I was like, do I really want this as part of my life?
Mm.
And I just dropped it.
Nice.
And when I dropped it, I was relief.
Yeah.
I didn't have to give any more time to it. Now, do people still buy the course occasionally? Yes, there, you can have it. And the people that bought it before, the companies that like lifetime access, fine, I don't care. It doesn't cost me anything. Yeah. But I don't want to, I realized I didn't want to be a sales trainer.
That's a skill in itself, by the way, being able to drop stuff. Most people don't.
No, that's right, they don't. And everyone says, you're so good at sales. I'm like, yeah, but I don't want to teach people in sales. But it helped me use social media.
Yeah.
So it helped me make content. So, there's some confusion when it was switched from one to another, but helped me make content. So I think that a lot of people, they have a persona that they think the world needs to see, and they're frightened of that persona changing unless it's a persona of more or greater. Sorry, I'm interjected.
No, it's good.
So when you look at, because I'm really interested in this, when you look at the challenges that you faced, what was the biggest, the one that kind of made you feel the most?
Oh, I have a chronic challenge of shiny object syndrome. I still have not harnessed or got rid of that flaw in me. I cannot curb it. So the problem is I end up spinning way too many plates. I mean, there was like a 2-year period. I bought 15 companies, and I mean that was probably the most idiotic thing I've ever done. And as a result, I had 0 time, attention, or focus on any of them. And they pretty much, most of them did, or one, it was a tough sector anyway, because I was buying distressed businesses. And distressed businesses are buggered for a reason.
Mm-hmm.
They're effed up.
Mm-hmm.
I don't know what I can or can't say on the podcast, but yeah.
You can do an F-bomb if it's needed.
Yeah. And so not only was I chomping off way too much that I could buy, I was buying basket cases of businesses. And so literally I just, after a period of time, I mean, I'm still suffering business indigestion from back then in 2016.
Really?
Still. And yeah, so I long for the days where I have just one business. It's my ongoing quote to my wife. I'm like, I can't wait till we have one business. So I'm in a multi-year process. I'm just taking a big samurai sword to the group and I'm cutting, selling everything at the moment. And I just want one business. But even though I say that, with what's happening in the world right now, I wake up most weeks with a brand new business idea going, oh, that would be so good. And because we have a team in place and I've got some really awesome people that are super capable, I can now basically farm out most of the tasks in setting up new businesses and whatnot. That it's hard. Like with that magpie syndrome, I'm like, oh, this business, there's an opportunity here. So it's an ever going struggle. But I think I'm slowly coming up with coping mechanisms. So what I find, especially with trading amplifies all of the worst flaws in you. And so you always end up with loads of coping mechanisms. So one of the business coping mechanisms I'm building, or been doing it for a few years now, is that you have to segment the types of businesses in your life. So I've got 3 main groups. So you have your boutique lifestyle group, your growth group, and your enabler group. You don't have to, but it's just what I like doing. So the boutique lifestyle business group are for businesses that you're just going to have as cash cows. No plan on selling them. They're paying your bills. That's your income. And that means you don't have to take silly risks, or you don't have to do reckless stuff, because you've got these lovely businesses that are just bringing in cash. So that's your bread and butter stuff. The growth group is stuff where, right, I'm going to set up, run, grow, sell, and do it in under 5 years. Aim for a 3-year exit, but most likely everything takes longer than you think. So it's probably going to be 5 years. And if you haven't hit your targets within 5 years, you're doing something wrong, or the world itself has changed. Things are moving way faster now. So that's the growth group. So you have a whole bunch of businesses there that you set up, and then that's just to exit. going through all the M&A stuff, like, really targeting who's going to buy. And then the enabler group, this is a group where I'm actually the most excited about, and I don't give a shit about the EBITDA or exiting, because I'm one of those crazy lunatics that believe I'm going to live several hundred years, not in an organic format, but if you listen to people like Ray Kurzweil. So Ray Kurzweil has an 86% accuracy with predicting the future, has done since the 80s and 90s, and nearly everything he said has come true. And the ones that he says that he missed, he was only out by a couple of years. So, like, one of the things he was talking about was the singularity. So obviously that's the physics term, because what past the event horizon, you have no idea what happens. And he was saying that the moment we have AGI, that is the singularity. So he's the guy that coined the term singularity, but for AI.
AGI, just make sure.
Artificial general intelligence. So when you have an AI which has the same computational ability as all humanity combined, basically. So a robot or a computer that is as clever as humans as a whole. And that is the singularity, because when you look at the intelligence staircase, the moment we have an AGI, let's say we do it on at midday on a Monday, at 12:01, that AGI is now one step above us on the intelligence staircase. By Friday, it's created its own language. It's doing things that will take humans thousands of years to even understand what it's doing. And for all intents and purposes, it's become you just created a god, basically. Going back to Kurzweil, he said that AGI, that singularity, will be in 2050. Then you revise it, 2035. He's now saying 2029. So, but the crazy thing is, long before we even get AGI, we will have the ability before 2030 or before 2029, where we will be able to upload a version of yourself onto the cloud. So obviously I'm not going to go into the whole soul and spiritual type stuff. You'll be able to upload your mind, let's say, to the cloud. That then just opens up a whole can of worms of what can and can't happen. So I'm looking at this from first principles point of view, going back to my groups. I'm going, right, let's just say, I mean, it's a non-zero probability. So let's say he is correct, and loads of other prominent people like Elon, etc. They all say this is going to happen.
Mo Gaudat.
Yeah. Your organic vessel may deteriorate over time. I mean, we've got CRISPR coming along, so that's probably going to kick the can down the road a bit. But let's say, digital Siam is going to be here for hundreds of years. What am I going to be doing for hundreds of years? Well, hopefully I'm going to be doing some cool stuff. Like I want to build loads of green projects and all that sort of stuff. But in a nutshell, I'll be in business. I'll trade to the day I die or get deleted. And I'll be in business, because the only way you achieve things like real things in the real world is in business, really. NGOs don't really make much of a difference these days. All real innovations, revolutions, etc., they come from business owners. Elon, obviously you probably think I'm an Elon fan. I am, but it's all based via meritocracy. So my enabler group is, if I'm going to be in business, what do I need? What helps? So the goal is to have an accountancy firm, a law firm, an insolvency practitioner firm, an M&A firm, an investment firm, tech, R&D, marketing, basically everything in business. But I want to own all of it. So then when I'm doing business or setting up a business or buying or whatever, I can just parachute my enabler group and go. Or here is a new opportunity, a new thing, new tech, whatever, like construction 3D printing I want to get into. If I had my enabler group, I can then capitalize on that way faster than, yeah. So that was my little rant. I don't know what the question was about. I've gone off on one. Yeah. So yeah.
So you set these three different parts up of business, so that you can essentially, one is just so I'll summarize it. So one there is just to produce cash flow so that the bills are paid and everyone carries on. So you got your cash flow businesses, you got your growth businesses, so your opportunities for exit, your enabler businesses,
shits and giggles.
Shits and giggles.
Yeah.
Okay. And there's three. Is it thirds though, or is it 50% one, 25, 25? What's the just roughly?
In terms of what, focus or money or
No, I didn't care about your revenue. About where the focus is.
I've got 90% of my focus in the growth group, 5% in the enabler group, because there's no rush with that. That happens, it will just happen by default. Like we've got a bunch of those companies already. and 5% in the boutique.
Interesting.
Honestly, it's that shiny magpie, shiny object syndrome. I'm looking at the world right now. Everyone's seeing doom and gloom. And yes, in the very short term, and when I say very short term, over the next 5 years, there is a very high probability of absolute economic calamity about to unfold. But let's say 3 years plus, I am probably the most bullish person on everything, humanity, tech, everything. And it's all because of tech. And like,
So hold on a minute. You believe that we're going to have an economic meltdown?
almost unavoidably.
Tell me why.
So, God, how can I compress this? There are obviously in the world of finance, as you know, there are a billion different metrics. And of those metrics, you can curve fit all sorts of things. Like, hell, you can get a chart up and have some fancy moving average crossover system. Go, oh, look, worked here, here, here. But you've curve fitted it. Doesn't necessarily mean it's going to work in the future. And so I guess, again, this is coming from my trading side. You really have, when I'm placing a trade or an investment, you have probability and confidence. So you have two percentages. So what is the probability of a successful outcome in whatever move? And then how confident are you in that probability? So there's two percentages. It's that seesaw I'm always weighing up. And so when I look at the world of all the different metrics out there, what are the ones which have always worked? Not you're not curve fitting and put it in a fancy light so it works just for your narrative, etc. You have to be completely neutral. Think like an alien. That's my thing. I always look at anything I get into like an alien. Ignore the societal norms. Now, three of the leading indicators that have never broken are interest rates, unemployment rates, and interest rate, unemployment, and oh bloody hell, I've gone blank.
Inflation.
Inflation, yeah. So if you go to the Federal Reserve website, you can get, it's called the FRED. You can get a whole bunch of charts. So if you look at interest rates, every single time we've had, oil is also one of them. So every single time you've had a very sharp rise in rates, it always leads to economic crash. But there's caveats here. When they pause rates, if they pause it for, say, 6 months, it actually causes a boom in stock markets, always.
Yeah.
When they then cut rates, that's when the crash begins. So it doesn't, on the outlook of it, it doesn't seem to make sense. The thing is that...
So cost of borrowing's gone up. Okay, so interest rates have gone up. Cost of borrowing's gone up.
Yeah.
That means it's now more expensive for businesses to borrow money. Then it plateaus.
Yep.
Stock market goes up. When they then bring the interest rates down, that's typically when the calamity happens.
Yeah. So from an economic sense, there would have been some trigger. Stuff is breaking down, like .com crash, subprime mortgage collapse, etc. And the velocity of money, so MV, starts dropping. And so what do all governments and politicians do? Print. So they try and kickstart it, like clear.
Yeah.
And they do that. A central bank only has two levers. They have manipulate interest rates or print more money or not. And what we found, they always floor both of them to the point, if you go back to 2008, they dropped rates and they printed shitloads of money. And the more they use it, the less effective it gets. So every single time you've seen that sharp drop in interest rates, within a 12-month period, you have a full-on recession, always. So that's one thing.
And interest rates are going up right now?
Yeah, they are. So,
but they've gone up a lot, so arguably...
The fastest rate in history.
Yeah, in history.
History.
How... There will come a time where that has to slow or pause.
Yeah, I think any time from now to sort of before 2025, we're in for an economic crash. But this is just one metric. You should never just go put your whole investment thesis on just one metric. So that's just one thing. If I had charts or piece of paper, it would be good to just lay that there. You then look at unemployment rates. Now, I'm not going to go into U6 or how it's calculated. It's all an utter lie how it's calculated. But let's just take their official figures. And you look at, a 70-year chart of unemployment rates. Every single time official unemployment is at rock bottom, what happens? You have an economic crash, which is weird. Now, if you look at real unemployment rates, like it's sky high. I mean, if you look at the amount of unemployed 25-year-olds or below, it's just ridiculous. But the thing is, they always change the way that they count someone. If you've lost a job, you're not counted as unemployed because you're still looking for a job. And it's only after a period of time that, like a year of not having a job, then you're classed as unemployed. But if you're unemployed for something like 3 or 5 years, you then go off the charts completely. You're like a terminal unemployed person, so they don't count you anymore. But anyway, when you look at the charts and it's rock bottom, within a 12-month period, you always have a global crash or a US crash, let's say. Right now, we're at the lowest in unemployment rates ever. Since 1970, something like that. So look at the chart. Yeah.
Lowest unemployment since 1970, because we had really low unemployment for a long time, didn't we?
But it's pretty much
at its
local
lowest.
lows, yeah. So right now, so that's another thing. Then you look at inflation. So again, without going into it, when you have, again, not looking at the CPI lie or CPI, etc. When you have raging inflation, you then always, within, again, a 12-month period, you then have a crash. And also, so those three
Do
metrics,
any of those three can work independently, you're saying? Or do you say based upon them all working
so here's
together?
the crazy thing. They all work hand in hand.
Okay.
So you can get those three charts, put them all on top of each other, and everything I just said, every single time you have that grey zone, which is on the Fred website, a recession. And there are other things which actually add fuel to the fire. When you look at, if you then superimpose the oil price chart, it's interesting. So we're in a position right now, very much like the 70s, where you had a massive oil shock. So oil prices went absolutely sky high, and oil is the lifeblood of all countries, right? So the higher the oil prices go, every country has to spend more of their budget on energy, basically, which then rages inflation. So rising oil prices is actually one of the main causes for obviously inflation going up, etc. But you then have big drops in oil price, and then it's fascinating. I could go on, but it's hard without showing you the charts. But when you look at all these big factors, always lead to a crash. And the other thing is look at billionaires. What do they do, not what they say. So if you look at even the prominent billionaires, Gates, Bezos, Elon Musk, etc., what do they do? What do nearly all of the elite do before big crashes? They lay off staff like relentlessly. They borrow as much as possible / sell stock. But yeah, more importantly, they borrow as much as possible. Just look at what they're all doing. They're laying off, I think something like in the top 25 US listed companies, something like over 250,000 people have been made redundant in the last 12 months. Loads of companies are borrowing as much as they can / selling stock. They're battling down the hatches, basically. They have better data than all of us. I could go on.
So when you take that into consideration, you'll always find there's opportunity.
Oh, yeah.
Okay, at a time like that, when there's blood on the streets, there's opportunity. Yeah. The average man on the street won't. No. Because you've got, a lot of the time, you have momentum investors that are sitting there and they're like, that's been going well for the last 2 years. I'll have a piece of that. Yeah. And that's very interestingly, when you take a mutual fund, nearly every mutual fund will report 3 months, 6 months, 12 months, year to date, and 3 and 5 years. Yeah. And so they look, the naked eye looks at that performance and says, oh, well, if it's made 50% over 5 years, so that's 10% a year. That's not a bad one, which is a really, really bad way of doing it. Bad. But that's what people do. What do people do? How do they find the opportunities when there's blood on the streets? So let's say this economic crisis happens in, let's just say 12 months' time for the sake of argument. 12 months' time, there's bloodshed for 6 months.
Yeah.
Do we just hold our cash until such times that we go again? Or
it depends what segment of the public you're talking about. Because again, if you did that standard distribution model on let's say the UK public or US public, it's all going to be the same. Everything within 2 sigma of that bell curve, that's like 96% of the population, they are not in the position to capitalize on all of these opportunities that may happen, which is, I hate saying it, but it's a sad fact, unfortunately.
Which demonstrates even more how money management, cash flow management, money psychology, wealth psychology should be taught to kids at school.
Oh God, yeah. It's just that massive knowledge gap.
More so than, the Battle of Hastings.
I know. It's ridiculous.
Yeah.
At school, schools teach our kids freaking useless stuff. Like, I can't remember the last time I applied pretty much anything in from school into modern day life. Yeah, I
No,
used to-
surely you're using trigonometry every day.
Yes.
Come on, you must be using it. And you must be referring to the periodic table on a daily basis.
Always, yeah.
I bet you're absolutely clear on magnesium ribbon, aren't you?
like with
You
maths.
not got a Bunsen burner at home?
No.
What's happening to you?
I mean, I used to be an Air Force pilot, and everyone thinks, "Oh, you must be really good at maths." I promise you, you could take 1,000 people around
There's
me
cameras
right
everywhere.
now.
So wherever you are,
I know.
keep looking at my
Yeah,
one.
I know.
He's looking at you.
I'm probably the worst person at mental arithmetic you'll ever find. I'm terrible at maths.
Did you ever have passengers on your planes?
Yeah, loads. Yeah.
Really? Did they know that?
Or thing is, with flying, you only need one equation, which is distance, speed, time calculations. But then you can, for a short period of time, really hack those that math. So you just, it's so you get with aviation, it's rough approximate numbers is really what you
at
need.
the end of the day, you're working in a skill set, and you've learnt a skill set for that. So,
but again, with trading, you don't really need maths either. But yeah, schools are massively kneecapping our kids' future potential with the bollocks that they're teaching them. And I'm getting on my high horse here. Unfortunately, the schooling system, you probably heard this loads. I mean, it hasn't changed in 200 years. It's a massive sausage factory, basically. To basically, they're obsessed about, all schools are obsessed about the grades and how they fare against other schools. And, get good grades so you get into university to get a good degree, to then get a good job, etc. And I'm not knocking jobs, by the way, for anyone that's listening. They're not. On the wealth generation curve, jobs are an essential first step. You can't bypass that. You need a job to learn core skills. But the schools are teaching kids that is the way of life. But I know loads of people that are middle line managers, professionals, airline pilots, engineers, accountants, lawyers, whatever. And a vast majority of them hate their jobs, especially lawyers. I know loads of lawyers where they've spent all of their younger years doing really hard at school, and they're now a lawyer or a solicitor, and they've done really well. They've got a good salary, but they are trading 12 hours a day every day, and they're like, I'm fried.
Yeah, absolutely. That comes from the romance or the romanticizing of what that type of industry would be like.
Yeah, exactly.
And the careers advisor not saying, well, hold on a minute, you're not going to be standing up in court doing a Danny Crane or a Boston Legal. It's not what most lawyers do, you know. Some do.
Endless reading, basically, in law.
At the end of the day, you're sitting there at a desk and you're going through contract after contract after contract. So glamorizing in many ways, like they glamorize lots of things. You know, I'm sure if how many people I've met over the years that I want to be a fighter pilot. Do you know what's involved in being a fighter pilot, or do you just want to star in Top Gun?
Yeah, exactly.
Okay, so.
Sorry, we're going all over.
No. This is really interesting, and it's a language I understand. And I think these are valuable lessons for our audience. And so, let's talk about then how people find opportunities. I know you got your bell curve. I know that opportunities, but there are going to be people that have want opportunities. I obviously live in the Middle East in Dubai. There's a lot of people there with cash. Should they sit on their cash? Should they take a different approach? We've obviously seen that Janet Yellen just approved this loan or increasing the debt ceiling, which means we're going to have a further devaluation of the US dollar and every currency that's tied to it. That's already demonstrated itself over time recently. Could the US dollar have crashed? Well, I think that would have caused an even bigger problem globally than just the US dollar crashing. So that's why it didn't happen. But how do you keep going on lending and creating money? It's just like that just can't go on forever. So at one point or another, like with every other country it's happened to, it will collapse. And we've got many examples of smaller countries where that's collapsed. And whether that be Argentina, Zimbabwe, whatever it might be, there's a bunch of them out there that are exact examples of what the outcome will be. Yep,
exactly.
So maybe we should just all go and buy Bitcoin.
Yeah, hell yeah. I mean, God, there's loads of threads that we could go with that one. But yeah.
Well, let's talk about it.
Okay, so with that first thing, if let's say you agree with us or me and that we are moving into an economic uncertain time, being in cash is actually a wise move. I know, like I always say, being in cash, you're making 0% APR or ROI, etc., and you're basically bleeding against, the tide.
Against inflation, yeah.
Being in cash during, bloodshed, that's when you actually make your ROI, when you buy, not when you sell. So, being able to pounce on stuff, I think is. So I've actually been in cash for 18 months now.
Well, at the end of the day, right now, let's take a glamorous stock like Nvidia.
Yeah.
Okay, really glamorous
Booming,
stock. AI gone like crazy right now. If you said to me, Spence, if you wait 3 months, I'll be able to get you that at a 50% discount.
Hell yeah.
Hell yeah, would be absolutely the answer. Yeah.
But again, it's that probability and then the conviction of that probability.
Mm-hmm.
Yeah. So,
but if that existed, that probability and the convictions, the confidence in that.
yeah.
Okay, if you bought Nvidia at 50% of its price right now, you'd be thinking you're getting a bargain, yeah?
Yeah.
Okay, because of where we know that industry may be going. But that's an example.
Yeah. And also for the, I guess, the everyday Joe watching this, most, like, if there was a 50% fire sale at the petrol pumps or the Sainsbury's, Tesco, or whatever, everyone would go, queuing up to buy as much petrol as possible, food and stocking up, blah, blah, blah. But when that happens on the markets, everyone shits their pants and goes crazy. That is when you need to be buying up.
Really good point. That's a really good point. Okay, there's a 50% sale at the petrol station or in Boxing Day sales.
Yeah, jerry cans and
yeah, everyone's going mad. That's really interesting. However, so what we're seeing with crypto at the moment, obviously the legal beagles are out. Securities and Exchange Commission in the States are saying we're having you boys. These are securities, okay, and for whatever trumped up rules and structures they're accusing these guys of. Yeah. I don't know exactly in fine detail, but we've seen it impact the price because everyone started selling.
Yeah, one of the most comical charts that I personally have, I'm a bit of a geek, is that there is a chart of dollars per Satoshi. And if you look at that chart, the dollar has basically just gone diagonally down from top left to bottom right ever since Bitcoin launched and had real price discovery in 2010. Basically pizza day, effectively, where was it 10,000 Bitcoin bought 2 pizzas or something like that. That's when basically Bitcoin launched and it effectively had something like 10 cents per Bitcoin, whatever. Since that
wasn't even that high, was it? I thought it was lower than that.
Oh, it was, but that, I think when you work out how much,
if it was 10,000 Bitcoin at 10 cents, the expensive pizzas.
But that chart has basically been doing this, and it just shows that the dollar purchasing power is declining chronically, and by default, Bitcoin is getting more purchasing power, and you see that with the price of Bitcoin, and it's only going to get worse for the dollar, and we actually the SEC, the Federal Reserve, all these fat cat politicians, etc., they're actually going to be Bitcoin's biggest bull vector, because what do all politicians and monetary people do in times of need and craziness? They lower rates, they pump the currency supply as hard as they can, and all that's going to do is pump Bitcoin's price crazy. So there's a thing called so I have to backtrack a bit. There's probably some people watching this going, oh, Simon doesn't know what he's talking about when it comes to inflation, and how I said the currency supply is inflation. Do you mind if I just quickly explain why I say that? Because most people say, oh no, inflation's due to the CPI basket, blah, blah, blah. The reason I say that is because there's a thing called the Cantillon effect. So if I am the Federal Reserve, I have editing privileges of the monetary database, as in I can just pluck out $1 trillion out of my ass. That $1 trillion has never existed before. So I can go out into the open market and buy anything I want at current prices. But then over a period of time, that $1 trillion will slosh around, and then price then absorbs all of that extra funny money. A bit like if we're in the desert and we had a certain amount of bottles of water that came in every year, and let's say there's £100 in that economy, bottles of water will be at a certain price. If I just came along with £10,000 and just bought up all of the water, what do you think would happen to the price of each water bottle? It would go up. So when all these central banks do various forms of injection, whether it's lending or some of the fancy ways, basically just expanding the currency supply, it is nearly always absorbed into the stock market and property. Because basically what happens is the banks, they put their mouths around that fire hydrant and then they soak it all up. And it always goes to stocks and property, which is why stocks and property supposedly always go up. It's only because of the currency supply expansion. And then because of that, it then eventually filters down into the general inflation. Now, if you look at the average growth of the UK stock market or the US stock market over the last 30 odd years, it's between 15 and 16%.
Per year?
Yeah, per year. If you then look at the US currency supply and the UK currency supply expansion over the same period, 15 to 16% per year. That is why the global monetary hurdle is at least 15%. So we know they're always going to keep on pumping and pumping and pumping, which is only going to boom Bitcoin. So if you have no money or whatever, going back to the guy that said just buy $1 worth, whatever, like Bitcoin is that emergency oxygen mask that is deployed in an airline when shit hits the fan. Like this is going back to Michael Saylor. He has this good thing where he's saying, so you have oxygen blood in your body, and the equivalent to that in the real world is currency. I can't remember it. Economic energy, currency, and economy. And basically, blood is useless unless it has oxygen, and a body needs blood, doesn't it? But so what's happening is that imagine the economy is an airliner. We're at 35,000 feet, and we have a sudden rapid decompression. So all the oxygen is sucked out, and therefore we're having economic entropy. And the only thing which is going to literally save you is that oxygen mask, which is Bitcoin. It's the only thing that's going to keep you breathing, whereas everything else is devaluing or diluting. It's got like 200% CAGR.
But what about people that say, well, maybe I should just buy another property?
Okay, so
if I just buy some more property, then property always in the long run goes up. So
I love this topic. So in the UK, obviously all my stats are really UK based. From 1900 to 1965, UK property prices were flat. It only started booming in the 1970s because Thatcher and Reagan said every man must own his own home policy, and they started massively expanding the currency supply to help fund and instigate the massive property boom. And it's only really since the 70s that property doubles every 10 years, but it's only due to currency supply. Now, it's all very well, and so this is why you have loads and loads of billionaires and millionaires that made all their riches in property, right? That's fine. But the world is a completely different place now than what it was in the 70s, 80s, and 90s, hell, even in the 2000s. So let's draw a line in the sand right now, halfway through 2023, that mentality of property always doubles, it will always be fine, blah, blah, blah. I think you're only safe for maybe 5 years, 10 years, but you then have to look at the real projection of where everything is going. So at the highest level, the biggest risk humans have as a species is rapidly declining birth rates and fertility. If you look at those charts, it's pretty much a vertical line going down. So there's a massive myth that, we're overpopulating the earth. You're not. You can have every human, all 8 billion people standing shoulder to shoulder and in Manhattan. That's how much space humans take.
Say that again. It's really profound.
You could let's say you got rid of all the buildings in Manhattan, and so it's just land. So it's just land.
Yeah.
You could put 8 billion people standing shoulder to shoulder just in Manhattan. Again, look at things like an alien. So what I've put a YouTube video about this ages ago where I was like, okay, how much land is there on Earth? Okay, cool. However many billions of hectares, whatever. How much habitable land is there? Get rid of the mountains and deserts. How much habitable land is there? And I worked out that 8 billion people, every single person could have an acre of land each and still have oodles of space. But anyway, so going back to the threats of the property thing. So we have declining fertility rates massively ever since COVID and all that sort of stuff. Birth rates are falling, and we're going into all of that. And not just that, we're having an explosion in please don't hate me, for lack of a better word, non-procreating humans.
It's all right. This is a Dubai podcast. we do not care, and we don't buy into the woke nonsense.
Oh, good. The woke bullshit.
Yeah,
Great.
we don't. I'm not interested. Good. So all of the LBGT spirit penguins or whatever they are, I really couldn't give a shit.
Well, 1 in 5. So the last study that I read, 21% of all Gen Z are LGBT, etc.
21%.
1 in 5
Gen Z.
Basically. It's ridiculous. 21%. And that's increasing. And then when you look at the chart of, again, this is my term, non-human producing humans, as in people that are not going to pop out kids, etc., that chart is going up. So we have, from the biggest perspective, a human existential risk here. So we are not going to get to ridiculous like 50 billion people on the planet like some companies say they are. It's not. I think that when you look at the charts, we'll probably peak at 12 billion, and then it's just down forever. Japan lost more humans than it produced for the first time in history.
Mm-hmm.
So Japan is the first country ever to lose humans.
Mm-hmm. More deaths than births.
Exactly, and that's only increasing.
It was 650,000. I
Yeah,
think was the
that
number.
was the exact number. Yeah, I read. So that's the biggest picture, but that's looking over many decades. So, but going back to the property thing, well, what's happening? We're already seeing in Germany massive de-urbanization. So we're seeing parking lots, or car parks being turned into parks and stuff like that. There are pockets of Europe where there is just not enough people to fill all these flats. I know in the UK it's slightly different. Every builder I speak to says, "Oh no, there's not enough houses for humans, etc." But let's just take transportation. At some point over the next couple of years, Tesla is going to have its own ChatGPT moment where there's roughly 3 million Teslas on the road. There will be a moment where they'll, let's say in a year or two, an over-the-air update, and you'll have 3 million Teslas that will be level 5 autonomous capable, let's say. Now, obviously, legislation is then going to drag its knuckles along the ground. But let's just say, even with minimal progress, at some point over the next 5 to 10 years, we're going to have ride-hailing as probably the biggest, in terms of miles driven per year. I think ride-hailing is going to be very low, and then it's just going to take over to the point where I think, really, within 15 years, it'll probably be illegal to manually drive. Because when you have level 5 autonomy, if you have an ecosystem where every vehicle was level 5 autonomous,
mm-hmm.
there won't be any crashes.
Mm-hmm.
So I think
humans will be the problem.
Exactly, and then you'll have massive taxes if you are going to manually drive or whatever. And so what that means,
like ULEZ already, isn't it? £12 a day or whatever it is.
I know, yeah. That part of that is a con as well. If they really cared about ULEZ, they'd actually change the underground system.
It's a scam.
Because if you look at the air pollution in the subway compared to on the street, it's great. Down in the subway, all these diesel engines and whatnot, it's like the most polluted air in Europe, I think.
Yeah. London Underground, yeah, I saw that too. Crazy.
It's nuts. But so let's say, with ride hailing, with all the studies and metrics I've seen, is that the amount of cars will slowly start deteriorating, and then you won't have a need for all these massive car parks. They'll all be taken down. And so, going back to property, I just think with the advent of the big human threat, transportation will change the ecosystem a bit. But the biggest thing is construction 3D printing, so additive manufacturing. I mean, that's crazy. There's a company in America that can print a 600 square foot house in about 5 hours. Print. And it's really high quality. And so if you, again, look at that projection curve with even, very conservative innovation and projections, like within, say, 5 to 10 years, you'll be able to print a house which is better, same size as, let's say, a Taylor Wimpey house, but it will last longer, it's better, it's cheap, weight like a tenth of the price, etc. So what's that going to do to house prices? I mean,
okay.
Yeah. So let's do a real example. I'm a nobody from Norwich. No one knows me. Doesn't matter. I promise you, I will be getting into construction 3D printing. Now, just for shits and giggles more than anything, just as an experiment. So let's take Norwich, okay, where I'm from. Let's say there's a random, street where, I know, there's 50 Taylor Wimpey houses that have been built, 4-bedroom, let's say it's 300 grand a house.
Barrett boxes,
yeah, whatever. 50 over there. Let's say I come along with me and my friends, we buy a chunk of land, and I can print 50 houses, the exact same specification, but sell them for 150k. What do you think that's going to do to house prices in the whole area, not on that street? It's going to massively depress
drop
just
them.
in that local area. Because they'll say, I still have to buy the land. So land prices will probably stay the same. Yes, over the next 5 to 10 years, population will be going up. that's going to fool a lot of people. But it's we're still on the up with population. So yeah, we'll probably I'll still have to buy the land, but the cost to build it is going to be 1/10 of the price, and I'll be able to build it in months, not years, or even less than months.
Less than months, yeah.
So 3D construction printing is going to be a thing, and I don't think residential property or commercial property is going to do it. The main reason I want to do it is that if you another chart, if you look at refugees, that especially in war-torn nations, and there's more environmental issues at the moment. The amount of people that are made homeless is just skyrocketing, whether it's climate or whatever. Oh, don't even start on climate change. But if you had the ability to, let's say, print 10,000 small homes in a week, I mean, wouldn't that help? I mean, governments would just let's say you just gave it at cost price,
Well, you saw what they did with that football stadium in the Qatar World Cup. They built it out of containers, and then they took all of the accommodation that the people were staying in during the World Cup and sent it to Syria.
Yeah.
And so, a quick fix, quick solution solves a lot of problems cost effectively.
Exactly. Yeah.
They took that stadium down because it was built out of containers, which I thought was a brilliant idea. Why is that a bad idea? So, so we 3D print our properties. Much cheaper than the current properties.
1/10 of the price.
With potentially better build construction project, better materials, longer lasting, and less human error because they're being built by the computer.
Yeah. How long do those Taylor Wimpey houses last? Like before there's mass errors? Like
it's interesting you say this because I've been in Dubai for 18 years.
Yeah.
A house in Dubai after 18 years needs a full renovation.
That's not bad actually.
No.
Compared to some of the UK.
So a house in a house in Dubai after 18 years is knackered.
Yeah.
It's the equivalent of a 100-year-old house here.
Oh, I see.
And that's because the product hasn't been built very well. So they brought cheap labour in from overseas. They bring them in. One day the guy's a bricklayer, next day he's an electrician, next day he's a plumber. So, you're not getting high quality work being done. So people are having to renovate their houses top to bottom after that period of time. So you bring in 3D printing, into Dubai, where there's a lot of people moving because taxes are more favourable.
Yep.
I used to say it was tax-free, but it's not anymore. It's now 9% corporation tax.
Wow.
But then you essentially impact dramatically that market. Now, can the government control that in some way and say, guys, you can't sell them at that price. I know it's only costing you this much, but you're fucking the market up.
Governments have always been known to protect private industries in certain, so they'll probably delay it, or a bit like when level 5 autonomy comes around for driving, just watch governments drag their knuckles and go, no. It's a bit like seatbelts. How many years were seatbelts proven to save lives before they mandated it? 20 years? But things are moving a lot faster. I think this will be a lot faster because they'll then be negligent from a legal and insurance purpose that, but every day you delay level 5 autonomy on UK roads, X amount of people are dying, and then there'll be pressure that way.
Okay, let's talk about Bitcoin.
Love it.
Your ideas, your concepts, everything that you've spoken about so far, clearly the learnings that you've been doing are really valuable for everybody that's listening today. I can see you're a guy that likes to work with charts. Your hands all over the place. You just like, no, I want to point at that. If I'd have known, I'd have brought a flip chart for you. I get that. I really get that. It's how I learn too. So let's talk about why we should own Bitcoin, why everybody should own Bitcoin, and what percentage of their portfolio should be Bitcoin and why.
So everyone should own at least one, some Bitcoin, at least $1. Well, this is where a lot of people then disagree with me. I personally think you should put the majority of your wealth in Bitcoin. So this is where I sound a bit crazy.
Majority.
Yeah.
Okay.
So
why?
Obviously, you have to do your budgeting so you know what your outgoings are for your life or business, etc. So, for me personally, it's a bit weird because I've been in cash for 18 months now because of the crash. I predicted the 22 bear market, so I have been in cash. I'm just waiting to buy. But let's just say it's a normal.
What's the price today? Do you know?
No.
Hold on, let's have a look at crypto prices today.
28K, 27.
Because it went down, didn't it?
Yeah, I think it's about 27.
Crypto.
I'm actually shorting Bitcoin right now.
Are you?
1 second. Let's have a look.
Okay, so it's $26,437.
Nice.
ETH is at 1,800.
Yeah.
Yeah.
Yeah. So the way I orchestrate my life is that make sure you have your income stream so that you can pay your bills, etc., pay your staff, all that sort of stuff. But I personally will have 90% of my capital in crypto. Yeah.
90% of your.
Yeah, at least. And this is why.
Whoa.
Yeah.
Whoa. 90% of what?
My capital, my
Does that
surplus. It's 90% of my surplus capital.
Surplus cash.
Yeah, in crypto.
Crypto or Bitcoin?
It depends on where you are in the market. So I have these seesaws. So obviously my long-term gain is to accumulate as many Satoshis as possible.
Yeah.
But there are better, smarter ways to do that than just blindly buy Bitcoin. So to the average person, yeah, just buy Bitcoin, sit on it for 5-10 years, and you'll pat yourself on the back, and your grandkids will thank you for that.
So hold a minute. So if I buy Bitcoin at $26,000 today,
yeah,
okay, and every month I get my salary, I buy Bitcoin.
Yep.
And just don't look at it. Leave it for 10 years.
For the average Joe, that is, do that.
That's the best savings That's the strategy.
Plan. Yeah.
Best savings plan.
That's the best savings plan or strategy that the average Joe could do. Just buy Bitcoin, sit on it for 5, 10, 15 years, and yeah, your grandkids will thank you.
But what if I don't care about my grandkids? I care about my retirement.
Oh yeah, you will thank yourself because all of a sudden, when the government printing press goes, Bitcoin, I won't be surprised to see $1 million or even $10 million Bitcoin. Easy. But obviously, what will $1 million buy you when that happens? Obviously, everything will go up in price if they start printing like nuts. But yeah, I see $10 million Bitcoin, no problem at all. Because all the central banks will propel that. But for someone that wants to be a bit smarter with their acquisition of Satoshis, there are better ways. So, for example, pound cost averaging or dollar cost averaging.
Unit cost averaging.
Yeah, unit cost averaging is, if you just blindly do it at all times, it's probably the worst thing you can do. Because what you're going to be doing is, yes, you'll be accumulating all the way up during the bull market and all the way during the bear market, but you will expose your capital to vast amounts of time where you're massively underwater. Now, yeah, over a 20-year period, it's fine because you'll be like, oh yeah, I bought all the way up here, all the way down here. But in the medium time frame, it doesn't take, it takes a little bit of learning to know what phase of the cycle we're in. Are we in a bull market? Because Bitcoin moves in 4-year cycles. It goes up for a year and a bit, down for a year and a bit, consolidates sideways choppiness for a year and a bit. And so when we're in a raging bull market, you should stop pound cost averaging. You should stop. And in fact, you should then enter a profit-taking phase of your portfolio. When we're in a raging bear market, and it is obvious, I mean, you don't need much hindsight. You can have like 3 months hindsight, and then you'll quickly see, based on a load of easy metrics, that, oh shit, this is a bear market. It's probably going to last a year or so. Then you just wait. Then you stay in cash. And then when you enter...
Joe, well, hold on. When you're in a bear market, though, if you take unit cost averaging, the chart, the best chart on a unit cost averaging chart is the chart that goes down and then comes back up if you're unit cost averaging.
But not if you're a sidestepper. So if you, and I've done loads of maths on this and loads of videos, basically... If you,
sidestepper?
Yeah, so what I call it sidestepping. So if you took someone that's going to go, right, we're a bear market, I'm just going to buy every month regardless, blah, 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 blah. And then have someone else that is just, you don't even need to learn that much extra, just to basically go, right, let's say most Bitcoin crashes will crash at least 70% from all-time high. From that local high, Bitcoin will in a crash. It's done more, but let's say you're conservative and go, right, we're most likely going to have a 70% crash, or hell, 60%, whatever it is. If you're only like 30% down, then okay, it's highly likely there's more to come. So when Bitcoin gets to say 50, 60% down, then you can start averaging in. But what I prefer to do, so going back to sidestepping, is let's say you have an amount of crypto and you think there's a very high probability of falling. You sell, get into cash, you wait till it falls, then you go back in. You've got more units then. Then you sit in. And then if you think there are other signals that you're about to fall again, go into cash, wait till it drops a bit, then go back in. So sidestepping, if you don't want to, let's say, time the market in a broader sense, you can sidestep your way down. So from a dollar perspective, your portfolio will look like a bag of balls because you're just taking mini loss, mini loss, mini loss. But every time you're buying back in, you're getting way more units. And so, and those extra units are actually do really well, especially if you have something which you can stake.
Well, hold on a minute.
Yeah.
Let's respect that the average Joe is probably the majority of listeners.
Mm-hmm. Okay.
Of course, you're going to have that percentage that are like-minded.
Yeah.
Then you're going to have the big percentage that the average Joes.
Yeah.
They're looking at Bitcoin right now,
Yeah.
and they're like, should I buy this bloody Bitcoin? And
Yes.
if I buy it, how much should I buy and how often should I buy? And so your first answer is actually the answer. Take a percentage of your salary every month, buy it every month.
Yep.
Don't look at it. Come back to it in 10 years.
Yes.
Right.
For most people, just do that.
Okay. So then you've got the people saying, well, should I be buying some Ethereum as well? Some Solana, some XRP? Should I be buying a little bit of this and a little bit of that? And, my mate works for this company and he's told me that this one's a dead cert to the moon and whatever it might be.
All those, yeah.
What should people be doing? Should they just be buying Bitcoin or should they be considering others as well?
What you buy and how much you buy should be directly proportional to the amount of knowledge you have acquired in that.
Okay, but people have got no knowledge in Bitcoin,
then
and we're
just
telling
buy
them.
Bitcoin.
But no, they have no knowledge in Bitcoin. Very limited knowledge.
Well, the answer
in
is you got to spend at least 10 hours of focused energy in learning it. So, in my personal view, there is no excuse for laziness in terms of learning something new.
Love this.
No excuse.
There is no excuse.
No, you are fully accountable for your life, and that includes your money and your family's wealth. It's your freaking responsibility. If you're going to be thumb and bum, mind and neutral, and do zero jack shit knowledge acquisition in the field of money, you sort of are bringing destitution upon yourself in the future. So you're always living. You're feeling the results of actions you did 5 years ago or 10 years ago. Like right now, I'm eating a party bag size of crisps every night at midnight. Not good for my health. I'm fine for the moment, but I know in 5 years' time, my belly is just going to do this. I'm aware of that. I'm choosing to ignore it for the moment. But most people do that in money-related things. So and we're living in the time of Google and YouTube. We have all of humanity's knowledge that's ever been created for free. Pretty much.
If you want to learn something in people go, it's really confusing. All you have to do is go to ChatGPT and say,
Bard.
Can you please explain to me in Arnold Schwarzenegger's tongue or whoever it might be that you want, how Bitcoin works? Yeah. And you'll get something, how from an Essex man's point of view, whatever it is, a bricklayer's perspective, how whatever.
Explain it now in a 5-year-old language.
I
still don't understand 3-year-old language.
Yeah.
You have zero excuses. So going back to what I said, the amount of money you put into it and how often you buy into it and what you buy should be proportional to the amount of knowledge you have in it. So don't just randomly go and buy ETH or Solana or whatever just because, that's just mental laziness. You're going to, and also I'm not a fan of diversification. So this is where most people, this is where I think financial advisors con the entire world, in my opinion, because they're talking to normal people and go, oh yeah, you just got to spread your baskets everywhere, spread your eggs everywhere into everything, blah, blah, blah. Well, by doing that, you are being lazy with your knowledge and money because you're then, by default, exposing your money into things which will go down and some that may go up. You're never going to breach the 15% annual hurdle, ever. And no one ever got rich in a time-efficient manner by spreading. No one. If you look at every billionaire on the planet, millionaire, no one ever got that from a job in a 10-year period. I mean, yeah, you can have the CEO of a big bank, but how long do they take to get there? 20 years working up the ladder? That's not a time-efficient manner. So if you're looking at wealth generation as an alien, remember, I look at everything like a freaking alien. I don't care what society thinks. what is the most efficient and logical process? Well, if you're under the age of 60 years old right now watching this, you can turn your life around in 5 years at least, 10 years even. I mean, if you're say 60 years old, you've got another 30, 40 years ahead of you. So spending 5 years, I mean, you don't even have to get to crazy wealth. You can, if you're got a low salary and let's say you just want $5,000 a month income, you could do that in 5 years easy. You don't have to do the crazy stuff that you or I or other people are doing. So I'm going off on one here. Oh yeah, diversification. Yeah, you only get wealthy when you focus your time and money into a specific pot. So the way I look at things is I have my immediate sphere of intense knowledge and focus right here. But also in investing, you need to know a little bit about a lot. So you have this wide peripheral vision. Okay. So for me, crypto is I watch it like a hawkeye. It's my job to know as much as I can about crypto. But I look at everything from tech, AI, 3D construction printing, CRISPR, what billionaires are doing, what the governments are doing, what is stakeholder capitalism, which is a big thing the WEF is trying to push out. So if there is a bullet or an arrow coming to your personal basket, you should be able to pivot long before it hits you. So can I give you a kooky real life
Let's finish on that.
So I have followed the World Economic Forum for a long time, mainly Klaus Schwab. And I used to like him 5, 6 years ago, and I've completely changed my view on him and that organization. And one of the things I found very early on is that everything that they pontificate on happens. And I used to think, wow, they're really good at reading the future. I no longer think that. I think they have more of a hand in that future. And one of the things that Schwab and the WEF were going batshit nuts on is that, you know, in the near future, we will have a pandemic, blah, blah, blah. So I'm probably killing YouTube views now for saying those words. And that, you know, he was basically talking about lockdowns and everything 5 years ago. And then it got stronger and stronger up into 2019. And then I realized, wait a minute, this was back in 2015, 16. I was like, if I just have one business and there is, you know, world pandemic, you know, pandemonium, let's say, I'm at risk here. I've got real counterparty risk that some bullet could take me out and then I've got nothing. So one of the reasons I had lots of different businesses in different sectors is, I guess, diversification. Whoops. Yeah. But I didn't know what was coming. And then 2018, 2019, he got really strong. And then Bill Gates started talking about it. And I was like, something's coming down the pipeline here. I'm not sure what's going to happen, but I'm just going to make sure that I have enough different types of income streams. So touch wood. It's a bit cringy to say this. 2020, 2021 they were very good years for me, mainly because I had a bunch of businesses that absolutely died. So my retail-based businesses just went tits up, but I had a bunch of other businesses that did really well. So my personal income wasn't attacked, so to speak. But I did that. I owned that because I set myself up in a position to do that. So now, looking forward, what are we seeing? We are seeing, again, all of these threats. We've got stakeholder capitalism coming in that the WEF is trying to force into us. That's going to be basically run by the whole new religion of ESG, environmental, social governance. Guess who owned and created that ESG movement? BlackRock. And so you then have to put a different set of sunglasses on and go, right, what is the world going to look like in 5 to 10 years' time? It's all going to be ESG up the yin yang. We've got, 15-minute cities and all the bits and bobs coming in down the line. The WEF and Schwab are now constantly talking about what they're calling a virus or a digital cyber COVID, I think is the way he calls it. He said at some point there's going to be a massive cyber attack that will affect all computers. Energy grids will go down, transportation systems go down, everything goes down, and that shits me up. So I think sometimes it does pay to be paranoid and then be a bit like your own Noah and build your ark. And so for me, I'm now thinking, shit, all my businesses are affected by digital stuff. So one of the things I want to do now is buy and set up big wholesale food. I want to buy a big wholesale food company and just fill it with non-perishable food. So at best, it's just an insurance policy. So if all my digital businesses go bust or whatever during the cyber pandemic or whatever, at least I've got this thing where I've got food for my family, and then I can actually then get an income, because you can stockpile rice and pasta relatively cheap now. But I mean, if the logistics network grinds to halt for even a day or two or a week, all shit breaks loose.
It does.
I mean, Sainsbury's has less than a week's worth of supply of food, and Tesco. The average household has less than 3 days worth of food, typically.
The consumption is large. I invest in smart farming, and
Nice.
One of those, the company that have got the largest strawberry farm in the UK.
Wow.
They produce 8 tons a week, and just in London, Tesco's just in London need 80 tons a week.
Jesus.
Of strawberries. And these strawberries are coming out of the facility straight the same day into the store, and that's 2 Tesco stores.
That's insane, isn't it? But wow. But yeah, going back to your question before I ramble on any longer, buy Bitcoin, and I guess ETH. I'm very bullish on ETH. I'm bearish in the short term, but guess which crypto the World Economic Forum loves? ETH.
It loves ETH.
It absolutely loves it. So there are a lot of powerful people that love ETH. So obviously they're going to help propel it, because they're saying it's the most eco-friendly crypto on the planet, not dirty Bitcoin, etc., etc. So ETH is going to be a good long-term bet. And I'm not shilling. I'm not paid at all. But one of the projects which I'm really excited about is a project called Casper. Now, this is June 2023. We're recording this. What is it? The 8th of June. 6th of June. Sorry. It's the 8th of June right now. Sorry, my watch is a bit back to front. So 8th of June, right? We have all sorts of crypto risk right now. So we have the SEC that's got this massive regulatory anvil that has been threatening the crypto industry for a year now. And they're like, we will regulate the industry, but we won't give you any guidelines whatsoever. They're suing Coinbase, Binance. Obviously, that was all instigated by FTX going bust and all that sort of stuff, which was amazing. And so they're threatening the whole industry. So any crypto which fails passes the Howey test, as in will then be deemed a security, is going to get absolutely clobbered, right? So a lot of smaller cap cryptos I think are going to go bust. The blue chip cryptos like Solana and all the other, let's say the top 20 or top 50, I think they'll get the treatment that the banks do. They'll be like, right, you're a security, slap on the wrist, pay this fine, and reform your systems so you're compliant. They will survive because they got a nice war chest of cash, but lots will die. The only crypto they've said is not a security is Bitcoin. But why? Then you have to look at the reasons why Bitcoin is not a security. And then when you look at this project called Casper, Kaspa, and actually, clarification, I own no Casper right now because I'm sidestepping it. I think it's got a lot more falling to come, and then I'm going to pounce like heavy on it. It has no pre-mine, no pre-sale, no VCs. It's proof of work, sorry. It's the fastest proof of work on the planet. It's not even a blockchain, it's a block DAG, which a DAG is a decentralized cyclic graph. But long story short, it's the first crypto that's fully solved the trilemma issue. Are you familiar with the trilemma? So for those not familiar, with crypto, there's these 3 points which everyone's trying to solve, which is scalability, decentralization, and security. So since, or basically forever, you can solve 2 of them, but not 3. So you're either scalable and very secure, but you're not decentralized, or vice versa. Same with Bitcoin. It's it's very secure, it's decentralized, but it's not that scalable, or it is, but it's slow, chunky, it's expensive, all that sort of stuff. So what's happening is that you're getting because most cryptos solve 2 of them, that to fix the 3rd thing, you need layer 2s. So that's why with Bitcoin, it's slow, chunky, and expensive. So you need a layer 2 like the Lightning Network to make it fast, etc. With Ethereum, it has all its own problems. So that's why you have Polygon and an Arbitrum one and all that to make things better. But Casper is the only layer 1 which solves the trilemma. It's fast. It is ridiculous.
So do some research on that.
Yeah, and I'm being paid by no one to say that.
It's okay. It's not financial advice.
No, it's not. But from a tech perspective, it's like every other crypto is a steam-driven car, and this is now a Tesla that's just rocked up.
Got it. Siam, thank you so much for coming to join us on the show today. It's been great fun talking to you. Obviously, there's lots of this language we both share and lots of wisdom that you shared with everybody today. So thanks for joining us.
Sorry for rambling.